please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets are more or less mixed in today. In fact, we have the Nikkei that had recovered from the low point of the day. So just keep an eye on that market. It's trading more or less flattish as we speak. Investors, though, they are keeping an eye on the rising tensions between the United States of America as well as Russia over Syria. So that's going to be a point that we're going to be keeping an eye out on all through the trading session. But the Japanese market recovers from the low point of the day, so that's good news. The Kospi is holding with a gain of close to around 0.3% or thereabouts. Remember, we are the South Korean central bank that's kept its base rates unchanged at around 1.5%, and that was really the expectation there. So that's a relative outperformer today because the Taiwanese index was more or less flattish, trading with a gain of around 0.1%. And the Straits as well is trading mildly in the green. The SGX Nifty, though, is indicating maybe we could have a 30 to 40 point uptick just to kickstart trade.
Okay, well, let's tell you about Wall Street then. US stocks closed lower as investors have assessed the rising geopolitical tensions after tweets from President Donald Trump suggested he was preparing for a military strike in Syria. The Dow ended with cuts of over 200 points, while the S&P and Nasdaq declined 0.5%. CNBC's Aditi Roy gets us the latest on Wall Street.
U.S. markets falling into negative territory today. The Dow falling 218 points, the S&P losing 14, and the Nasdaq off by 25. Oil prices jumping to a 3-year high on rising tensions in the Middle East. President Trump warning Russia to prepare for a strike on its ally Syria, while Saudi Arabian forces reportedly intercepted at least 3 ballistic missiles fired from Yemen at Riyadh and the southern city of Najran. Sears will begin auctioning off 16 of its mall and suburban properties starting on May 1st. The move coming as the company announced plans to close more than 100 additional stores by April earlier this year. And CEO pay had another big year in 2017. The average CEO pay at the 100 biggest U.S. companies jumped 5% to $15.7 million, up from $15 million the year before. All this according to a study by executive compensation firm Equilar. And that's the action from the U.S. market. Back to you in Mumbai.
Well, and an important data, the Federal Open Market Committee, they released the minutes from its March meeting. That showed that, in fact, all participants expected both the economy to strengthen as well as inflation to reach 2% target in the coming months. This, in turn, justifies the continued interest rate increases.
Okay, well, the U.S. consumer prices fell for the first time in 10 months in the month of March, weighed down by a decline in the cost of petrol. But underlying inflation continued to firm and rising prices for healthcare and rental accommodation. The Labor Department in the U.S. said consumer price index slipped 0.1% last month, the first and largest drop that we've seen all the way back since May 2017, after climbing 0.2% in the month of Feb.
All right, then, on that note, let's get in some important market opinion on the road ahead for the U.S. markets.
We've certainly gone from an environment where we just kept getting good news and good news and good news. It built on itself, and we continue to get positive surprises. And that allowed the market to, I think, move higher and consistently move higher, and volatility drop. More recently, we've actually seen a little bit of a divergence. You're getting news which is good, but not quite as good as we were expecting. And as a result of that, you start then having to reassess some of your forecasts in terms of where the world goes, how quickly it might get there.
We're coming into an earnings season where expectations are incredibly high, for 18% earnings growth, I think 7% revenue growth. So the question becomes, which is more important? Is it the cost of capital, which has gone up, or is it the fact that expectations are so very high at about 21 to 22 times on the S&P on a trailing basis? You know, there's some growing into the multiple to be done. And I'm a little bit skeptical as to whether or not that can happen. And you know, combine that with a higher cost of capital, and we're talking, I think, about a pretty tricky earnings season here.
Okay, well, that's the opinion coming in. But the latest move by China in the escalating trade conflict with the United States was very positive. That's the word coming in from Trump's economic advisor, Larry Kudlow. However, he adds that that doesn't necessarily mean that tariffs won't happen before negotiations occur.
That was a very important speech by President Xi. Very important speech, because up to now, all of our trade initiatives, they're really trade reforms to settle trade disputes. the Chinese responses have been very, very negative, very, very bellicose, negative, mean, and so forth. So this is the first time, I mean, he's the president for life for that matter, that they had a good, positive statement.
Is there an actual process underway right now? Is there an actual negotiation happening, or are we just kind of throwing things out into the air? And maybe this whole thing could kind of recede a little bit and just see where it goes over the longer term.
Well, look, there's a very good process going on inside the administration, and you've seen some of it, and there'll be more coming. We're talking about tariffs. Maybe not, maybe yes. President has been very tough on this. He also wants to negotiate, but I can't come up here and say no tariffs. Maybe this thing will turn out very well. You know, look, it's not willy-nilly stuff. I mean, we've been having a lot of meetings, and way before I got here. I think you got to look at this as a long-term process, and I'm an optimist. You know that. So I think what's going to happen is we are going to have negotiations at some point. There may be tariffs before, maybe not, all right? We shouldn't panic. So far, there have been no tariffs implemented. I hope everybody realizes that. So far, nothing implemented, and that's important. And you're not going to see any of that probably for a couple of months.
All right, then a quick check on the European markets. Well, they closed lower. Earnings season have kicked off for that. In terms of the big indices, well, the German DAX, that was one of the big underperformers. It was down close to around 0.8%. The FTSE, though, that was a relative outperformer because it ended very marginally in the red in yesterday's trading session. But the pain was far worse in the broader markets, the Irish as well as the ATHEX. The ATHEX was down more than 1% in yesterday's trading session, so the Greek index was under some pressure, and you had the Irish index as well that ended with a cut of nearly around 1%. In terms of emerging markets, well, it was a mixed bag. The Russian index continues to see some selling pressure, was down roughly around 1% odd, while the Brazilian index, a relative outperformer from the emerging market basket yesterday, ended with a gain of around 1%.
Okay, well, staying with the US, Facebook founder and CEO Mark Zuckerberg testified for the second day on Capitol Hill and faced much tougher questions. CNBC's Julia Boston reports on the same.
Mark Zuckerberg fielding questions from 55 members of the House Committee on Energy and Commerce over a 5-hour hearing that was far more contentious than his appearance yesterday, with today a number of House members interrupting him and demanding yes or no answers, like this exchange with Congressman Loebsack that captures a number of committee members' concerns about Facebook's data policies.
Is it possible for Facebook to exist without collecting and selling our data? Is it possible to exist?
Congressman, we don't sell people's data. So I think that that's an important thing to clarify up front. And then in terms of collecting data, I mean, the whole purpose of the service is that you can share the things that you want with the people around you, right, and your friends.
Questions weren't just limited to issues of data and privacy, with a number of committee members pressing Zuckerberg on concerns about content censorship, fake news, as well as the illegal sale of opioids on the platform. Zuckerberg saying better artificial intelligence is key to solving these issues.
When are you going to take down these posts that are done with illegal digital pharmacies? When are you going to take them down?
Congressman, right now, when people report the post to us, we will take them down and have people review.
Why do they have to, if you've got all these 20,000 people, you know that they're up there. Where's your requirement? Where's your accountability to allow this to be occurring, this ravaging this country?
Congressman, I agree that this is a terrible issue, and respectfully, when there are tens of billions or 100 billion pieces of content that are shared every day, even 20,000 people reviewing it can't look at everything. What we need to do is build more AI tools.
Investors seem satisfied with Zuckerberg's responses based on the stock's move, up nearly 1% today after gaining 4.5% yesterday. Julia Borston, CNBC Business News, Washington.
Well, the currency space, the dollar struggles against the yen as investors, they sought some shelter in safe haven currency. That's the Japanese currency on concerns over the possibility of Western military action against Syria. That explains why, in fact, the dollar yen is moving towards that 107 odd mark.
From precious metals, we have gold prices which have risen on the back of heightened political risk, slip following the release of the minutes from the Fed, which indicates a hawkish view on interest rate hikes.
Well, and in the world of commodities and crude oil prices, they are hovering near the highs that we have seen in 2014 last. That's on concerns of military escalation in Syria. Prices eased off a tad bit though, as US supplies, that's what's weighing on prices. In fact, Anshu Sharma caught up with Fatih Birol, the executive director of IEA, and started off by asking, what's the outlook on crude prices and where are oil prices headed?
I think we see that the prices are going in the direction which are flirting to be too high for many important countries such as India. Because India is a oil importing country, and when we look at the future, India will be importing more and more oil because the Indian economy is growing. Therefore, the needs for transportation, for cars, for trucks, for jets, and for the petrochemical industry, there will be a lot of need for oil. And the more the Indian oil demand grows, the more the import increases, India's economy's vulnerability to the high oil prices will also increase. Therefore, this is an important issue for India, not only for energy sector, but also for the Indian economy.
Prime Minister Narendra Modi had said that India will grow 4.2% every year for the next 25 years. So what's your thought on it?
I think when we look at the global economy today, all the major economies, India is definitely the bright spot of world economy today. And I have all the reasons to believe that the Prime Minister Modi's success will continue, and we will see a strong growth in Indian economy.
What do you make of the geopolitical situation right now? US has made just a comment on the Syria chemical fire. How do you see crude reacting to that? How much do you think prices will be impacted?
I think the geopolitical tensions are there, and geopolitical tensions happening in a region where a lot of oil is produced and exported. As the head of the International Energy Agency, I can only wish that these issues among the countries are resolved in a fair way.
Then keep an eye out on the SGX Nifty as well as the Kospi. The Kospi, in fact, today was sitting with a gain of nearly around, 0.4%. Now, that's come off the high point of the day. It's on the verge of moving into the red. And even the SGX Nifty, well, early this morning, it was indicating we're likely to open up with a gain of around 45 points odd. Now, it's giving a more, realistic opening. Maybe a 15-20 point bump up is what we could see just to kickstart trade. But back home on the Lal Street, the market managed to close in the green for the 5th straight day. The Nifty held on to the 10,400 odd mark. The Sensex closed above the 33,900 odd mark. The mid caps recovered a good 130 points odd from the low point of the day. They ended more or less flattish. The Nifty Bank as well did see a bit of a recovery yesterday. But the big headline really, Ekta, is that in fact the institutions, they're showing us the money now.
Yeah, well, one session.
Yeah, one session.
So let's see. But nonetheless, the markets did recover, like you mentioned yesterday. The Bank Nifty recovered, but it did underperform on the whole. And the advanced decline ratio was on the negative side at 1:2. What really affected the markets yesterday was obviously Brent crude rising above $70 per barrel and hardening yields. So the yield hardened all the way to above 7.46% on an intraday basis. In terms of flows as well, there was nothing that it was positive. Let's see whether the trend continues from the FIIs. It is the first buy figure I think we've seen in the whole of FY19. So that obviously would be a positive. They net bought 362 odd crores and the DIIs net bought 112 odd crores as well. So maybe that buy on dip strategy could be something that could be emerging more prominently in our markets, but obviously we need to see the trend. Now, in terms of cues to watch, there is more of the same from yesterday. So Brent crude is still at a 4-year high. The geopolitical tensions between US and Russia with regards to Syria is still simmering, and that is going to probably keep oil prices on a boil, according to analysts. Globally, the US markets had a bit of a sluggish session. They closed lower. Asia as well is quite sluggish, but the thing is that we have the SGX, which has come off the day's high, still indicating that maybe it could be a little bit of a positive start at this point. like I mentioned, yields are the other thing to watch out for. We had the 10-year harden above 7.4% in yesterday's trading session, and technically the key level that we'll be watching for back home will be the 50 and the 100-day moving average. Near-term range will probably be between that 50-100-day moving average as well as the 200 DMA. Lastly, oil marketing companies, I'd keep an eye on them, whether there is any sort of follow-on selling which emerges within the oil marketing companies, and emphasis ahead of numbers. Macro cues obviously to watch out for. CPI for March 2018 expected to soften month on month. IIP expected to come in a little lower, but still strong month on month.
All right, we'll keep all those cues in mind, Ekta, but a few more stocks that you want to tell us that we can focus on?
Well, yes, there are quite a few stocks to focus on today. So first up, we'll get Nisha to talk about Fortis as well, where there could be an IHH likely offer non-binding bid, which could be something that could keep the stock alive today. We have Biocon, where the company has made a statement that Mylan and Biocon are going to seek to accelerate introduction of a biosimilar for arthritis in the European Union. So that stock should be in focus. Tata Motors global wholesales number is what they'll react to. L&T and BEL have signed an MOU for defense products and systems. Z Entertainment has approved a composite scheme of arrangement, so keep that stock on your radar. Shimaru, wholly owned subsidiary incorporated in the US, be interesting to know their plans there. Quest Corp has completed an acquisition. Binani has clarified that shareholders' approval will be taken only for the sale of shares of Binani Cement. IDBI Bank, RBI has imposed a monetary penalty of, I think, around 3 odd crores. So, nonetheless, that stock should be on your radar. And BPCL has informed the exchanges. IOC, BPCL and HPCL have formed a JV to build an integrated refinery and petrochemicals complex in Maharashtra. So, these are a couple of stocks you should keep on your radar.
All right, Ekta, thanks so much for that. Well, Fortis deal, that's hotting up with IHH. They're taking the plunge as well. Nisha Podar joins in with all those exclusive details. Nisha, over to you.
Thanks for that, Nigel. Good morning. And sources with direct knowledge do share that while the market was speculating that IHH will make an offer, we do gather that IHH is likely to have already made an offer to buy out Fortis Healthcare. Last evening, they may have submitted a letter to the board of Fortis Healthcare to look for an offer to buy Fortis Healthcare, is what we gather from the direct knowledge. Now, the offer could be in the nature of a non-binding offer. So that is something to be watched out for, because already Fortis Healthcare had announced a transaction with Manipal, which is backed by TCP, and Manipal has already raised its offer, sweetened the offer to make it more palatable for the shareholders. So definitely IHH offer has to be higher than what Manipal has offered, above 155 rupees per share of Fortis Healthcare share. So that speculation could be actually put to an end if Fortis Healthcare really announces to the exchanges if they have really got an offer and what it could be. So that will be very, very closely watched out.
Yes, absolutely, Nisha. Well, the interest, at least for Fortis, doesn't end. But we need to take a break now. But up next, as the government mulls a sovereign bond issue in the overseas market in FY19, we'll tell you what. Well, bond yields surged in trade, fueled by inflation concerns yesterday. However, the bond yield started softening marginally on reports that the government is mulling a sovereign bond issue in the overseas market in FY19. We caught up with the PMEAC member Ashima Goyal and former chief statistician Pranab Sen. Let's listen in to what they had to say on this.
A sovereign bond issue, good idea?
Terrible idea.
Okay. Why, sir?
In short.
Okay.
Well, for the very simple reason, one of the things that you have to recognize is that if the government owes debt to its citizens, there can never be a case of sovereign default. It's simply not possible. The problem always occurs when the government owes debt outside. This is the problem all over Latin America. This was the problem in Greece. So it's anywhere where governments have actually borrowed abroad, they've run into problems.
Ashima, you know, the argument that Dr. Sen is making, that it always starts small And we all know the example of Latin America and what sovereign bonds, sovereign borrowing did to those countries. Therefore, don't even start. That door is best left shut.
Well, I believe in homeopathy. So a little bit of poison helps you become stronger. And you test the markets, you acquire experience, you get rated abroad, etc. And it helps you, it imposes some fiscal discipline. But I believe that predominantly you have to develop the domestic market. General advice is that your domestic market must be deep before you allow any of this foreign, even domestic, debt inflows. So we've been holding it as a low percentage of the total turnover, which is very healthy. But we must recognize that it's a tail, it can't wag the dog. And we must not allow it to wag the dog, because sometimes policy, the problem is even though it's a small amount, policy tends to overreact or over-worry about what will happen to those.
Dr. Sen, just finally, the point that Ashima Goyal is making, that a little bit of poison is good, so long as we are able to keep that sovereign bond amount limited to $4 billion, say. You agree, disagree?
I disagree. You know, she may believe in homeopathy. I believe in yoga, which is